thanks so much for bearing with the latest technological movement on the computer. Next, we have Wright coming in from ROI Corporation. We thought it would be really beneficial with everything that keeps changing in the economic climate of the world these days to sit here and talk a little bit about practice valuations. I know that's something that's always on everybody's mind. We've seen, obviously, the world of the corporate groups having had a tremendous impact on what the prices are. Some of that stuff is changing, and economic aspects are changing with interest rates, you name it, the Canadian dollar. So we thought, well, what is that doing to the value of the practice? Let's have someone come in who's more qualified to talk about it than I am. So I will turn that over to our good friend Ann Wright. Thank you very much, Ann.
Thanks for being here.
Do you need the clicker there? Sure. Ready to rock?
Hi, good evening. I think I know I am familiar with most of you here today. I'll tell you a little bit about myself, just very quickly. I'm a dental hygienist. I completed an MBA at Ottawa U as a mature student, and I wanted to find a position after 30 years in dentistry, anything but dentistry. I was done, like many of the clients that I see now. And lo and behold, what did I find out? I discovered that really what I knew best was dentistry, and then now I could use my business training in it. So here I am 27 years later. I'm starting my 27th year with ROI Corporation after a long career in dental hygiene. So I tease that Eileen and I go back a long way. I was a dental hygienist temp that she hired back at Kent Dental years and years and years ago. So we've got lots in common, Eileen, and lots of years in common. So thank you, Sean and Eileen and Les, for asking me to talk to you tonight. I'm going to digress a little bit because sometimes I think what we have to say, you hear the same thing from us all the time. Well, you're going to hear the same thing that you hear from us all the time, but from another spokesperson. So I have borrowed some slides from a recent presentation that TD Bank gave to dentists, and you'll see a lot of regarding financing and the current climate. So I want to but give the credit to TD for these slides, and you'll be able to see how they look at financing specifically dental practice sales right now. So what's the COVID impact on financing and our banks lending? And a short answer to this question is a resounding yes. Dentistry has shown itself to be basically pandemic and recession-proof. Clients were only very temporarily, this is TD speaking, temporarily impacted by COVID, and that was during the first 3 months from, what was it, March 15th till approximately June 15th of 2020. Other than that, the banks have not missed a step in their financing programs. Dentistry continues to be the largest group of CEBA loans, and most dentists have access, as you well know, to sufficient credit. Why are dental practices good investments? Very few loan losses. There is, what we're seeing now in the community is more due diligence on the part of banks. They're taking longer. They're looking more carefully at the financial information that a prospective buyer will produce. But consistently through these economic cycles, they're open for business. So once again, I'll reiterate that practice values have not decreased. Now, we are not seeing huge jumps that we did see about 5 years ago, and the huge jumps in selling prices. But year over year over year, practice values are continuing to increase despite changes in interest rates. Banks have responded by offering 12 years now for repayment. Way back when, in the 70s, it was 5 years. Then they went to 8. Then they went grudgingly to 10. Now many of the banks to compete have pushed up to 12 years. And as long as a bank will finance a purchase price at 100%, the practice values will continue to rise. Simple economics. Number of buyers have increased. We still have more buyers than sellers. So I tell my clients, and if you talk to me, you know I've said this to you, there is no panic. Practice values are continuing to increase. There's more buyers than sellers. It is still a seller's market, hands down. Not in a position where it's reversed or it's not looking like that's going to happen anytime soon. So again, limited inventory, not enough practices to purchase. Now, what are the effects of interest rates? So this is a little scenario that we drew up, looking at same purchase price at $1 million at 2.45%. The first year of interest would be $24,500. If you look at the same practice purchase today, $1 million practice at 5.45%, you see the interest has more than doubled, $54,000. Okay, 54.5 I think it says. It's a bit blurry from my angle. So this is a difference of $30,000 annually. Now some people say, would that impact your desire to buy a practice? Well, what's TD have to say? A 3% increase in lending rates on average. And this is from a presentation that they gave to dentists in Alberta, actually, just about 2 or 3 weeks ago. So they say, yes, the monthly payment goes up from $14,000 to $16,000. So the total cost of borrowing over the term, whether it's 10 years or 12 years, would be $255,000. But I have bolded the increase in payment is not an issue for financing approval. So if the practice cash flow supports it, the increased, yes, you're going to earn a little bit less, but they will still finance the purchase of that practice. So don't listen to anyone that says that, oh, you know, values have got to go down and the banks aren't going to finance. The banks still want to finance the purchase of your practice. Best place to start is with an appraisal. So it's a general process that we go through to determine the value, and we have a 20% discount for peers group members on our appraisal prices. If I forget to quote you on it, call me on it. I will certainly adjust the appraisal price. But appraisals are not just for selling. They come in, they're used for establishing partnerships, death, divorce, disability, and certainly for estate planning. So even if you're young, you've only been in practice 4 or 5 years, it's good to have an appraisal sitting with your lawyer or in your safety deposit box that you can go to should you need to sell your practice quickly. And we see this with the example of somebody whose child got sick. So someone very young, maybe not selling, I'm not saying they're selling, but not a bad idea to have that in your back pocket. Now, we hear about this all the time. There are several methods of evaluating a business. So multiple of earnings I'll talk about in a few minutes a little bit more. Discounted cash flow and cap rate, I'm not an accountant, but generally speaking, they look at the value of practice over time and in the future. We tend to look at ROI at what your practice is valued at today. We don't ask a buyer to pay for something that they're going to build themselves in the future. We think it's most important to value on what the practice is worth today. So we look at the earnings evaluation method and practice comparables. The sales that we have completed through that are comparable to your practice when we are evaluating the value. So the earnings method shows us how much a practice produces is when you have your revenue, you deduct all of your expenses, and we see what is left before the dentist is compensated. The direct sales comparison is what I spoke to you about before. is we compare practices to similar practices that have already sold. So we don't compare them to practices that we have sitting on our books that haven't been sold. These are actual sales, arm's length sales transactions. And we look through our database. ROI Corporation, we pride ourselves in being the largest brokerage in Canada and with the largest database of sold practices. So we can pull from across the country. We tend to try to get, you can see this one is generally Ottawa area sales because it's the most comparable. And we compare age, gross income, year-end, cash earnings, size of the office, appraised value, date of the appraisal, and so on, to see which of these practices fits best. And that's a key component to our evaluations. Now, at this seminar that TD Bank was presenting, MNP was also there. MNP, as you know, are a large accounting firm. Some of you may use MNP yourselves. What do they talk about that are being key to an appraisal? Dental production, hygiene production. Personally, also from being a dental hygienist myself, I like to see at least a 30% percentage of hygiene related to dentistry in a practice. I can tell you a buyer loves it when they see 40-45% hygiene to dentistry. They can't buy that practice fast enough because what that shows is the value of returning patients. Whether or not the dentist is even there, you have this cash flow, constant flow of income from the hygiene, a well-run hygiene department. So keep in mind 30% is, I would say, the base. Really, really like to see the more you can boost it up. 40-45% is gold. Collections. You'll hear us talk a lot about assignment, non-assignment. I mean, you know I'm not telling you anything. A full assignment practice, you almost need a full-time staff person to manage the insurance. It's so much better to collect your fees in full at the front desk and have the patient deal with the insurance company. I don't know about you, Eileen, but we highly, and we credit a client for this. So if we see a practice as non-assignment, they get a bump in their goodwill because we know that that's a much more valuable practice to a new buyer. New patients, there's some other key factors that MP mentioned, which tend to agree with: treatment plan, operating costs, downtime, etc. So back to TD a little bit, and this is also, I could put ROI along beside them, but I thought it might have more gravitas if I had a TD up there. What are the key factors that impact not only financing but also value? So associate contracts, very, very important. You should also include a restrictive covenant as well. If you're selling, a well-written restrictive covenant for the seller is also important. Employee contracts are becoming more and more important. I'm sure we hear a little bit about that tonight. Buyers like to see an office with an employee contract, and so does the bank, because it limits the liability somewhat for the new owner.
And what's a reasonable restrictive covenant?
I'm sorry, I didn't hear that.
What is the word used? Reasonable.
Oh, reasonable? So it's time and distance.
So what's a reasonable one that can be protected? That can be you can enforce.
But can you enforce?
Yeah.
Well, you know the law has changed a little bit on some of that now, right? Very recently. But it still doesn't hurt. I know.
I didn't know the law had changed. Really?
Yeah, it has. It has.
And what is it?
Yeah, if you would if you could answer that for me. It's just changed, well, a few months ago, right?
Hi, I'm going to be speaking later, but I am an employment lawyer, so I don't mind answering.
No.
So under the Employment Standards Act now, there's There are some limitations on restrictive covenants for your employees, but it doesn't apply to a seller in a purchase and sale type situation.
Yeah, I'm
And
specifically asking about an associate.
What about an associate dentist?
An associate dentist, yeah, you likely can't have a non-compete where they can go and open up again. But I'd have to probably find that out fairly quickly. But there are no allowable non-compete clauses anymore. So.
For anybody?
For very few. So there's some exceptions in terms of sort of senior executives and that sort of thing. But
So are
I
you
don't
saying
know whether there's a dental
So restricted covenant doesn't matter whether you have it or not in your agreement, it's not enforceable.
But that's for the
Is that what
seller.
you're saying?
Yeah.
This is for the
This is
associate.
for the
Well,
seller.
that says for the seller, which is, as you're saying, is a different thing.
Yeah, in a
But-
purchase and sale agreement where you're selling a business.
But I still have associate it would be in an associate, it's in most associate
And
contracts.
the associate contract, is your restrictive covenant enforceable? That's my question.
So nothing has changed with respect to non-solicit. They can't ask your patients to leave you and go with them when they leave. So that law hasn't changed.
But they can go across the street.
Again, I have to look
Okay.
at the legislation to see if there's a dental
Yeah.
exception, but the law has changed.
Yeah, okay. Good to know.
So you'll get back to us on
I
that?
can get
yes.
back to you
Okay,
for sure.
thank you.
Yeah, for sure, and it's recent, and I noticed that I had that in there, but I'm glad, I knew that you would be speaking tonight about it. So same thing with the employment contracts,
You
correct?
certainly can't have non-competes for like your dental hygienist or your,
It would cost you too much money to go after them anyway, so it's just a deterrent, really,
Yeah,
right?
Yeah, it's almost like an unenforceable
Yeah. It's just a
contract,
deterrent.
like language in the contract,
Yeah.
and it is a deterrent.
Yeah,
But yeah, I mean,
Yeah.
there's been a number of cases which she can probably reference where dentists have gone after the associate, and essentially like the courts have just ruled by saying, unfortunately for anyone in the room who has associates, the courts have ruled to say like you can't restrict that person from going out and earning a living.
no, you can't, yeah, yeah. It's just a deterrent.
A reasonable living,
yeah,
right?
but my understanding is for a seller, because you've received good money
Yeah.
for your practice,
Correct,
you must respect the covenants,
yeah.
both in time and distance. She's nodding, so I think I'm right on that.
Yeah, yeah.
Okay, what else does TD want to see? They like to see practice valuations, proper arm's length practice valuations by companies such as ours or lots of other companies out there that value practices. And up-to-date financial statements. And down here they have separate practices. We see this all the time when we're trying to complete an appraisal for a client. Somebody may have 3 or 4 offices and they have all of the financial statements in one, or there's one financial statement for all of the offices. And it's just, they don't know how to separate it. We have a terrible time trying to separate it. So if anyone here has multiple offices and you don't have separate financial statements for each office, speak to your accountant about it, because if you should ever have to sell one of them, separating one from the other two, sometimes the staff goes back and forth, they share supplies, and that's okay, but you have to have the separate statements.
It's a nightmare.
It's a nightmare, yeah. And the banks don't like it. They don't like having to sift through this as well. So important for both buyers and sellers. Tim Brown, the owner of our company, has been saying this for years. Avoid semi-retirement. And I know there's, he's always said, take the money and run. It's, working together is a challenge, and I know some people in here will be experiencing that. As we describe it, sometimes it boils down to old and young. Do we get 2-ply or 3-ply toilet tissue? You know, you get into silly disagreements about things that normally the seller used to decide on their own, and now the new person comes in, or the new person comes in and says, geez, I hate the decor of this place, it is so dated. Well, the owner is still there, kind of likes it, and thinks things look pretty good. So it does set up conflict. So TD is saying to sellers, avoid semi-retirement. Associate for a short period of time with the new owner of your practice, because everybody wants that, but try to avoid long-term relationships. Purchase the building if you can. I'm going to talk about the buildings in a minute. Used to be that if a building was also for sale, the banks would only finance up to a certain percentage, and they wanted a huge down payment for the property. Now, if I say it right, if the practice occupies at least 50% of the property, the banks will finance the property at the same rate as the dental practice. So they've really flipped on that in the last few years. So if you haven't a chance to purchase your own building, purchase it. Lots of benefits from owning your own premises. Look at the premise lease. Sometimes people will come to me. I have a client right now who's ready to sell. Their lease is up in a year. Well, a bank is looking at financing that will match the term of the lease. That's lease and renewals. So we're talking about 10 or 12 years financing. You must have 10 or 12 years on your premise lease. And if you're getting close to that, even if it's 9 or 8, the banks will have a more difficult time approving finances. Okay? I don't know if I said that clearly. You're all okay with me? So go back to your landlord, get the renewal. Make sure it's assignable to a new owner. Long-term renewals, I already talked about that. And demolition and exclusivity clauses are killers. The banks don't like them, and in some cases they won't finance. Period. You have a demolition clause in your lease. So I have one client right now who said, "What do you think I should do? My lease is coming due and I have a demolition clause." I said, "Offer more rent." See, your hands are tied. It's more important that you get out of that demolition clause and pay a little bit more in rent than try to negotiate a lower rent. So that's our advice about demolition clauses. Excuse me. And then TD is running down their list of programs that they offer for buyers. So below prime rates, low fees, extend the amortizations, extended interest-only periods you can usually get for a purchaser buying a dental practice, about 3 to 6 months interest only. Premiums financed on good practices. Now this is something that the banks weren't doing right at COVID. So if we appraised a practice for $1 million, it was difficult. Am I running out of time? Or am I okay? I'm okay. I'm almost done, I think. The premium was difficult to finance. So if the selling price was agreed upon at $1.2 million, the buyer would have to find a way to come up with that $200,000 from their own line of credit or bank of mom and dad or whatever. However, now the banks are going back to financing these premiums. Now they won't go sky high, but they will finance a premium over the appraised price, like 10 to 20%. I'm just throwing that out. I can't say for sure, but I know they have investor debtor programs and owner-occupied commercial property. Well, I already spoke about that. So just a little bit more detail on the property. No down payment, same as for the purchase of a dental practice. Payments are lower than rent. Generally, you take control of your premises and property values continue to rise. Later, you can sell the building. If you want to wait and rent out your property to the new owner for a time period, sure, you can do that. You can say, I'll rent it to you for 3 years, and you agree to buy it at the market price 3 years from now. you sell as part of the practice, which we recommend, or retain it long-term. That's from the seller's perspective. So making an offer. We prefer to see a bona fide offer on a practice. A letter of intent is just that. It's a promise to make a purchase of your practice, and there's usually no money involved. And the letter of intent can drag on. I have one that's dragged on for over a year. No money has changed hands. The seller is locked up because they've signed the letter of intent. They can't talk to any other people. And it can really drag out the process. We really prefer to see an offer. An offer has conditions. Conditional on financing, conditional on assignment of the lease, maybe conditional on the owner agreeing to associate for a while. And if those conditions aren't met, of course you can back out of you've got the reasons to back out of an offer, but it's a lot stronger than submitting a letter of intent. And then owner's transition, getting back to the owners again. Are you flexible? Will you stay or leave? Isn't that a song?
Should I stay or should I go?
What?
Should I stay or should I go?
Yeah, should I stay or should I go? Presentation of new owner to clients. I'm seeing this more and more now where the owner is saying, I'm done. I don't want to work anymore. I don't want to pick up a handpiece. But I'll come in and I'll introduce the patients to the new dentist. I'll hang around for a couple of hours a day, for a few days, for several months, and I'll pop in and make sure the staff is fine. And that seems to be something that's well received. And then again, if you decide to stay, can you accept the changes we talked about? So there you go. I know the practices are facing a lot of strains right now with cost of supplies, certainly finding staff. Eileen and Peers Group get calls. I get calls all the time. Do you know any hygienists? Do you know
Four
associate
today.
dentists?
Today,
Yeah.
4.
People are panicking.
Yeah.
But I'm thinking, I used to be a hygienist. Maybe I'll take that 25
No,
grand.
hey, I'll split with
Somebody
you.
might be desperate enough to hire me after so long.
Maybe
Anyway.
so lucky.
Any other questions?
Did you have a draw or no, not at this time?
No, I did not have a draw. I just wanted to remind people, though, of the Peers. Oh, you pick up one of these cards. This is a complimentary practice assessment. It's called a letter of opinion, and it's just that. It's a one-page letter documenting what we believe is the value of your practice. Now, we charge about $1,800, $2,000 for this to clients. Peers Group is free. So provide me with your, I'll let you know what I need. I need financial statements and I need a little bit of information. And we can turn this around in a week and give you at least so you have some kind of an outside idea of what your practice might be worth. Okay? Appraisals, as I said, are we offer a discount fee. And then I have a couple of, please help yourself to Tim's book. They're at the front where you signed in. If you haven't got one. And I've got some ROI readers. These are for the old people. These are to take to a restaurant so you can read magnifiers. Yeah. Anyway, thanks for your time. Thanks, Sean.
Thank you.